Do I need to file my taxes? Is the most frequent question these days. My child made $1,500 this summer. Do they need to report it? In this video, we'll go over the question who should report their income and who can relax and not to worry about going to a tax pro. Stay tuned. Let's look at some scenarios when you do not need to file your taxes and the IRS will not go after you. You are a senior and your only source of income is your Social Security benefits, and that amount does not exceed $25,000. You and your spouse are seniors and your Social Security income does not exceed $32,000. You are single, you have no dependents, and you work as an employee and made less than that much. However, if you look at your W-2 form and in the box 2 you see a certain amount, this is the money you're supposed to get back if you file your taxes this year. If that amount is insignificant and you're pretty sure that the tax preparation fee will increase the amount you see in the box 2, it's not worth your time seeking an appointment with a tax pro and filing your taxes. However, if that amount is a significant number, make sure to file your taxes. You are married filing taxes together with your spouse. You have no dependents. You both work for a company and you receive the Form W-2, and your joint income does not exceed this amount. But please do your due diligence and look at the box 2 of your W-2 form. Now let's look at the situation when you absolutely should seek an appointment with a tax pro. You're single, you have a child, and you made less than this amount. Actually, you do not need to file. The IRS will not go after you, but you should be genuinely interested to file your taxes because you will receive a refund from the IRS. You will get your taxes back. That is the amount you see in the box 2. Besides that, you will receive the earned income credit and the refundable portion of the child tax credit. If you remain passive and will not seek an appointment with a tax specialist, you just donate your money to the IRS. You just leave the money on the table. Similar situation. You are married filing jointly. You are both W-2 employees. You are claiming your child or children you made under this amount. You are not required to file, but I would strongly recommend you to do your taxes because you're supposed to get back the amount you see in the box 2. Besides that, you will get the earned income credit and the refundable portion of the child tax credit. So I urge you, don't be passive. Don't donate thousands of dollars to the IRS. This is the money your family needs so much. If you are self-employed, you worked for yourself, you provided, for example, a cleaning service, massage, nail design, or you worked at a construction as an independent contractor, or you did some DoorDash, Uber, Lyft. In this case, your working status is self-employed. Many people cannot reconcile with the idea that if you did some DoorDash delivery, you are self-employed. But it is as it is. You are self-employed for the IRS. And if your income exceeded $400, just $400, a very low threshold, you need to report your income to the IRS and pay the self-employment tax. The standard deduction does not help in this case. It reduces your income, which is subject to the federal income tax. The standard deduction cannot reduce the self-employment income. Self-employment income has a different status. It is the subject of the self-employment tax. For example, currently I'm working as an employee with the W-2 form. This income is subject to the federal income tax. Besides that, I have an income as a translator. This is a self-employment income. If your child who lives in your household and whom you claim as a dependent made some W-2 money during the year, that is, worked for a company, and that amount does not exceed this much, they do not need to file the tax return. If your child made more, yes, they need to file the separate tax return. Here again, if some tax was withheld from your child's wages, it's a good idea to file because they will receive it back. Besides that, one more reason to file: if they are an undergraduate student at college, they might qualify for the American Opportunity Tax Credit, a portion of which is refundable. If your child had some income from stock selling, interest, or dividend, and that income exceeded this much, then yes, they need to file their tax return. If you are a senior and besides your Social Security income, you have some distribution from your IRA plan or some interest, dividends, rental income, for example, up to 85% of your social income might be taxable. When you put money to your IRA account, like 401k or traditional IRA, you receive the deduction for that amount. That's why now when you are taking out your money from your IRA account, you need to pay taxes on this amount. That's it for today. I appreciate your attention and your time. Please don't forget to like this video and subscribe if you found it interesting. Take care.